I'm going to do a general market update today. We'll start with the stock market. I saw a lot of people panic yesterday. Um, and this is, realistically, this is just a normal daily cycle low. It just seems worse because we've been going up steadily for weeks. All of the QE that central banks are pumping into the market is creating these stretched and abnormally long cycles. And then when you get a profit-taking event, everybody tries to hit the door all at once. But as of right now, anyway, there's no sign that even an intermediate change has happened. It should, put it that way. If this is a daily cycle low, then we're starting a fourth daily cycle. In a normal market, the fourth daily, well, we shouldn't even have a fourth daily cycle. We should have rolled over and probably retested this March low right here during this cycle that was trying to left translate, was prevented from doing it. We certainly should have done it during this third daily cycle. That was also prevented from happening as the Fed kept the market propped up into the Jackson Hole event. We didn't have any pullback from the all-time highs, which is abnormal. That would have probably never happened in a normal market. The market would have hit that, pulled back into the daily cycle low in the normal timing band, and then gone through it. But the QE prevented that from happening. Get a strong breakout, and then we finally get a profit-taking event. People panic, and as of right now anyway, nothing unusual is happening. There's nothing here that's telling me that we've created an intermediate top, other than the fact that it's just too late in the cycle and this should be an intermediate top, but should be in heavily manipulated markets and markets that are being somewhat driven by monetary policy and central bank QE is, kind of goes right out the window. So just looking at what has happened, we've dropped down from overbought conditions. The RSI has gotten oversold, but it is bouncing quickly. The same thing that has happened, every other time during this intermediate advance. So, unless this were to turn back down immediately and get heavily oversold, I still don't have anything here that's telling me that we've formed an intermediate top. So I'm not prepared to say that we're going to continue down and get a much larger multi-week correction. Not yet anyway. We should. We're in the timing band for it. We're in a normal market without the influence of manipulation and central bank QE. We would absolutely be heading down into an intermediate cycle low, but I can't make that call right now because nothing out of the ordinary is happening. We've just got a daily cycle low here, one that got temporarily oversold and is now starting to bounce. Got an FOMC meeting next week. They're probably going to pump this market up into the FOMC meeting. Maybe we make a higher high, maybe we don't. Again, impossible to say. In heavily manipulated markets, weird becomes normal. So as of right now, this just looks like a normal daily cycle low. I don't have any indication that this was an intermediate top yet. The dollar cycle, again, kind of up in the air. We've got some signals that this was an intermediate bottom, but as of today, we're not holding the overbought condition on the RSI. So there is a possibility that this could roll over and come back down and get heavily oversold and break below this and continue this intermediate decline. I doubt that's the case because we were not able to hold these oversold conditions here. So I kind of think the dollar is probably going to right itself pretty soon and continue up and confirm this as an intermediate cycle low. And this is the weekly chart. We have formed a weekly swing. We'll have to see how this closes on Friday. If the dollar closes, as long as it doesn't close with a big reversal and give back maybe half of this candle, then a weekly swing is especially this late in the cycle, is usually a pretty good indication that we've got a final intermediate bottom. So we'll just have to see how Thursday and Friday play out, and where the dollar closes on Friday, and then maybe I'll have a better idea of whether or not we actually do have a final intermediate cycle low here in the dollar. And if we do, then we should rally for at least 4 weeks, maybe as many as 6 to 8 weeks before topping, rolling over, and then coming down and making lower lows. And finally, the gold market, it's just doing what I told you it was going to do. We're just bouncing back and forth from oversold to overbought. Nothing is embedding. We've churned away an entire month and gone absolutely nowhere. Got a couple of warning signs here. We got our first test of the 50-day moving average yesterday. We've got a breach of the intermediate trend line here yesterday. A warning sign. Unless gold can launch here and make a higher high, then any breach of the intermediate trend line is usually a warning signal that there's going to be more weakness to follow, and that we've started an intermediate decline. Got another problem here in that the daily cycle is getting pretty mature, and that means that we're moving into the period where we're going to get that plunge down into the daily cycle low. Now, if we start the plunge from up here, then it's not that big of a concern, because a plunge from up here is more than likely to hold above this low. But if we start the plunge down into the daily cycle low from this level, then it's very likely that this is going to break. So the longer this sideways churn drags on, the worse the outlook becomes, because this is a fourth daily cycle, and fourth daily cycles often will left translate and then move down into an intermediate cycle low. And so far, this cycle it's topped on day 4. We don't have any break of this high to indicate that we've right translated this fourth daily cycle, and I really don't expect that's likely to happen unless the dollar all of a sudden turns back down and gives us another leg down. If that's the case, then yes, we would probably come up above this and break it, but there's no indication that that's going to happen yet. And like I said, we've got a weekly swing trying to form. So at best, if the dollar has put in an intermediate cycle low, the best we can hope for is a sideways churn in gold. And if we don't get some upside traction soon, then gold is going to be in jeopardy of breaking down and confirming this intermediate trend line break when the plunge into the daily cycle low begins. And it could begin at any time now, as we're now 19 days into this daily cycle. So we've chopped away 19 days into this daily cycle, and we still haven't made a higher high. As we get later in the cycle, once we get into the 25 and 30 day range, then we're going to be in extreme jeopardy of starting that plunge down into the daily cycle low. And like I said, you don't want to start that plunge from this level here. Ideally, you would like to start the plunge from a higher high, but it's looking unlikely that is going to happen at this point.